Are you a business owner in Pakistan struggling to understand withholding tax under Section 153? Do confusing rules on payments for goods, services and contracts keep you up at night? In this video, we'll simplify the often complex world of withholding tax under Section 153 of the Income Tax Ordinance, 2001. We'll give you actionable information to ensure you're fully compliant and avoid costly penalties. Learn the rules, the rates, and when to withhold tax from payments on goods, services and contracts. Hi, I'm Your Name Presenter's Name, and today we're breaking down the core concepts behind Section 153, specifically what it means for your business. This video will provide you all information on withholding tax under Section 153 for payments on goods, services and contracts. Understanding Section 153 and its relevant rules is crucial. This is for every business in Pakistan dealing with payments for purchases of goods, provision of services, and any type of contracts. Failing to comply with Section 153 could lead to hefty penalties, defaults, and even legal issues. Let's start with the basics. Section 153 of Pakistan's Income Tax Ordinance deals with the deduction of withholding tax from certain payments. It has three main aspects: payments for goods, services, and contracts. When making such payments, you must ensure proper deduction of taxes. First off, goods. This refers to the sale of goods for cash or credit, whether under a written agreement or not. For example, if you purchase raw materials, you are buying goods. Next is services. This includes services of accountants, architects, dentists, doctors, engineers, interior designers, and lawyers, provided they're not your employees. Finally, contracts, which includes all types of agreements: civil, mechanical, electrical, labor, and transport contracts, except those for the supply of goods or services, if provided separately in the ordinance. These are very important for every type of business. So, who's responsible for deducting this tax? The simple answer is any prescribed person or you as the payer. This means if you're making a payment for goods, services or contracts, you're likely responsible for withholding tax. The withholding tax rates vary depending on several factors, particularly if you're paying an active taxpayer, filer, or non-active taxpayer, non-filer. There are also specific rates mentioned in the first schedule of the Income Tax Ordinance, or in relevant sections. The withholding tax rates for non-filers are generally higher, so it's important to ensure that your vendors or suppliers are on the active taxpayer list. If you're finding this helpful, hit the like button. It helps us keep creating content like this. Understanding exemption limits is crucial. For payments related to goods, there is an annual threshold of 75,000 rupees, and for payments on services, this threshold is at 30,000 rupees. If you are paying less than this amount in the whole financial year for an individual vendor, you may not need to deduct withholding tax. However, if payments exceed the threshold, tax must be deducted according to the law. Additionally, tax is not deducted if the payment hasn't been made during the tax year, or if the recipient falls under an exemption provided in a relevant section of the Income Tax Ordinance or the Second Schedule or SRO. Let's say you purchase raw materials for 100,000 rupees from a supplier who is a filer. You're liable to deduct withholding tax at applicable rates. If you hire an accountant for a financial audit and the total fees amount to 50,000 rupees, then withholding tax would be required to be deducted. And remember, even small contracts for services should have tax deductions. Let's say you hire a civil contractor for work worth 80,000 rupees, then the withholding tax rules would apply here. Here's how to ensure you are compliant with the rules. First, deduct the correct withholding tax amount at source. Next, deposit the deducted tax within the time frame provided in the law and rules. Remember, the timelines are different for government entities and other entities. Third, file the required withholding tax statements quarterly and annually. It's very important to submit the statements even if no payments were made so that you do not attract penalties. Businesses often make mistakes while deducting and depositing taxes. Some common errors include not deducting tax on all prescribed payments, applying incorrect tax rates for non-filers, not filing the statements in time, depositing tax late, and not understanding how to calculate tax base. It's very important to seek advice from your accountant to comply with the requirements. To avoid these issues, keep up to date with the latest regulations, maintain accurate records, file tax returns on time, and double-check your payments. If in doubt, always consult a tax professional. Let's recap the main points. Section 153 of the Income Tax Ordinance, 2001, is about deducting withholding tax from payments on goods, services, and contracts. Tax rates vary based on whether you're paying a filer or non-filer, and remember about exemption thresholds of $75,000 and $30,000 for goods and services respectively. File your withholding statements on time, otherwise you may have to incur high penalties. And here are some common questions we get. What if a supplier doesn't provide a valid tax registration? How do I calculate the tax base, and is sales tax included in tax base? These questions and their answers have been answered in the previous video. Remember that we have an in-depth discussion on withholding taxes under income tax law, and you may refer to that to find answer to such questions. That's it for today's breakdown of Section 153. We hope you found this video informative and helpful. Don't forget to subscribe to our channel for more guides on Pakistani tax regulations. If you have questions, please do let us know in the comment sections. Don't forget to like, share, and subscribe for more videos. What are your biggest challenges with withholding tax? Let us know in the comments below. Thanks for watching Tax Dosti YouTube channel. Stay compliant and we will see you next time. For more, visit taxdosti.com.